2018 was a bad time for UK business and geopolitics, with market and political upheaval in the wake of a Brexit drama causing investors to turn away from the UK and towards so-called safer markets such as the USA.
The December chaos in Parliament over the botched Brexit vote means that there is further uncertainty for British businesses, which are the foundation of many of our investment portfolios.
But is British business really on its knees? And if it were, is that even such a bad thing for investors? Let's check it out.
Welcome to Money Unshackled, the investment channel that sets you and your finances free. I'm Andy, this is Ben, and if you like what we say, hit the like button and click subscribe. Let's get into it.
The effect of Brexit. Is Brexit really causing that big of an impact on UK businesses? The bickering in Westminster is certainly causing international investors to think twice before investing in our great country, as a no-deal Brexit becomes more likely.
But the financial sector in the UK is its main industry and is standing strong in the wake of the chaos. It is rumoured that a side deal has been drafted in Brussels that will keep London as the financial centre of the EU after Brexit for at least another year in the event of a no deal.
And then there's the fact that only 6% of UK firms export to the EU. There will be some economic hit, that is for true. However, it won't be as bad as the media make out.
And it's not just the UK that is in turmoil, the EU is also in serious trouble. The European smaller companies has been the worst performing fund sector in 2018 according to the Investors Chronicle. We also saw markets plummet last year in the wake of a trade war between the US and China. Markets are in freefall everywhere, it's not just the UK.
The fundamentals. So what's good about the UK right now? Well, one recent development is that wage growth has increased by the highest amount since July 2018 at 3.3%. This shows that at least employers have the confidence that they can afford to invest in their employees. Also, the UK has a solid and long-established rule-based legal system that is our most valued commodity that we can offer to international investors, and is so rare in the world today.
The pound falling in value since the Brexit vote has only increased the incentive for foreign companies and investors to invest into our great country.
And interest rates, which are widely expected to creep up in the year ahead, are another sign that the economy is expected to be able to grow and withstand any side effects of increased interest rates on people's ability to pay and manage their debts.
We expect that as soon as the political situation is clarified, that money will soon start flowing in. It is estimated that up to £10 billion is being held back from being invested in UK businesses until the political situation has been resolved. Make sure that you are ready with money to take advantage of this.
Volatility. Volatility is a measure of how much a stock or a market moves in a given period. In a country rocked by political events like the UK right now, you would expect that volatility would go up. Indeed, the CBOE Volatility Index, VIX, which is a good measure of volatility in the UK market, shot up in the second half of 2018 from around 12 in the summer to 30 by the year end.
This is a great time for savvy investors to take advantage, buying when the price is low and selling when the price swings the other way. A word of warning, many established high street brands such as Debenhams, Carpetright and Thomas Cook imploded last year with falls in the share price of up to 90%. Don't always assume that what goes down must always go up.
FTSE crashes. As you may be aware, the FTSE 100 and the FTSE 250 have both slumped by the end of 2018 from their historic highs in June 2018. At time of filming, the FTSE 250 had fallen 18% since its summer historic high due to Brexit uncertainty and troubles in the retail industry in the run-up to Christmas.
Markets have a habit of overreacting to bad news and hate uncertainty. If you are a UK shareholder, it might be worthwhile to ride out these periods of fear. And if you are considering investing in the UK, then we think this is an excellent time to buy, as we believe stocks are underpriced. Britain is still the economic powerhouse it has always been, whatever the politicians in Westminster get up to.
Question of the day: will you be taking advantage of the chaos in the UK by buying into UK markets like the FTSE 250? Let us know in the comments below.
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is Money Unshackled. See you next time.